Hey everyone, welcome back to Corporate Decoder. Today, T. Rowe Price International Funds Incorporated, or T. Rowe Price International Funds Incorporated, just filed its N-CSR disclosure for its emerging market stock fund. And I'm seeing some interesting trends in how this fund is managed. Quick note, this is not financial advice. Just my take on public filings for educational purposes. This report gives us a look into where the fund is investing, how much it costs to own, and how it performed over the last 6 months. Let's dive right into the costs of investing in this fund. For a hypothetical $10,000 investment, the investor class shares of the emerging market stock fund cost about $66 during this period, which is 1.21% of the investment. That is not too bad for an actively managed international fund. Now, let's look at some of the fund's key numbers. The total net assets for the fund are a massive $6,637,683,000. That is quite a bit of money being managed. And the number of holdings, meaning the number of different stocks the fund owns, is 81. This means it is a fairly concentrated portfolio, which can lead to higher returns if the chosen stocks do well, but also higher risk if they perform poorly. The portfolio turnover rate is 16.2%. This means about 16.2% of the fund's holdings were bought or sold in the last 6 months. A lower turnover rate generally suggests a more long-term investment strategy, which can be good for managing costs and potentially taxes. Now, let's talk about where the fund is putting its money. The biggest chunk, about 40.3%, is in information technology. This is a huge allocation, showing a strong belief in the tech sector within emerging markets. Next up is financials, making up 18.9% of the fund. This is also a significant portion, as financial companies are often key players in growing economies. Consumer discretionary and industrials and business services each make up 9.0%. These sectors represent spending by consumers on non-essential goods and services, and businesses that provide services like logistics and consulting. Communication services accounts for 7.5%, and consumer staples, which are everyday necessities, are at 4.0%. Materials, which are raw goods like metals and chemicals, are 3.7%. Healthcare is at 2.0%, and real estate is at 1.2%. Finally, about 4.4% is in other categories. Overall, the heavy concentration in technology and financials indicates a fairly aggressive growth-oriented strategy within emerging markets. Let's see which specific companies are the top holdings. The number one holding by a long shot is Taiwan Semiconductor Manufacturing Company at 14.9%. This is a massive bet on the chip giant. Next is Samsung Electronics at 8.9% and SK Hynix at 6.2%. It is clear this fund is heavily invested in the semiconductor space. Then we have Tencent Holdings at 4.3% and Alibaba Group holding at 2.5%. These are two of China's biggest tech giants and show a significant exposure to the Chinese market. Unimicron Technology is at 2.4%, Delta Electronics at 2.2%. and Hon High Precision Industry at 1.8%. These are more technology and manufacturing related companies, further emphasizing the fund's tech focus. Finally, ICICI Bank in India is at 1.6%, and Contemporary Amperex Technology, which is a major battery maker, is at 1.5%. This top 10 list shows a strong tilt towards technology and manufacturing, particularly in Taiwan and South Korea, along with significant holdings in China and India's financial sector. Now, looking at the I-class shares of this same fund, the costs are slightly lower. For a $10,000 investment, it is about $53, which is 0.98%. This class has a higher minimum investment, so typically institutional investors or those with larger sums are in this class, and they usually get slightly better expense ratios, which is what we're seeing here. And for the Z class, it is even better. For a $10,000 investment, the costs are 0 or 0.00%. This class is usually reserved for institutional accounts or specific types of funds where fees are absorbed or handled differently. This is often seen in some of T. Rowe Price's own internal funds or very large institutional mandates. The total net assets for all classes combined is still reported at a massive $6,637,683,000, and the portfolio turnover rate remains consistent at 16.2% across all classes. The sector allocation is identical across all share classes because they all invest in the same underlying portfolio. We're still seeing that dominant 40.3% in information technology, followed by financials at 18.9%, and the top 10 holdings are also the same, with Taiwan Semiconductor Manufacturing as the leading investment. Let's look at the net asset value for the investor class. The net asset value per S-share at the end of the period was $51.99. This is up from $44.14 at the beginning of the 6-month period. That is a significant gain for the I class. It's very similar, ending at $51.94, also up from $44.21 at the start. The Z class ends at $51.6, up from $44.17. These numbers show the fund has performed well over this reporting period. Looking at the total return for the investor class over the last 6 months, it was 18.47%. That is a very strong return. For the I class, the total return was 18.60%, also very strong. And for the Z class, it was 19.15%. Again, a powerful performance. These numbers show consistent and strong returns across all classes on a percentage basis, which is what you'd expect when the underlying assets are the same. The slight differences in total return are due to the small differences in expense ratios and how distributions are handled for each class. Now, let's zoom in on the actual investments. The fund holds a significant amount in Argentina with 1.5% of its net assets. This includes companies like Mercado Libre and Vista Energy. Brazil makes up 5.0% with holdings in Ito Unibanco Holding, Localiza Rent-A-Car, and WEG. China is a large part of the portfolio at 21.9%. Here we see big names like Alibaba Group Holding, China Construction Bank, and Tencent Holdings. They also have substantial investments in China are shares like Contemporary Amperex Technology, which makes batteries, and Hengyi Petrochemical. India is another key market at 10.2%. With companies such as Apollo Hospitals Enterprise, Bajaj Finance, and ICC Bank. South Korea represents a substantial 17.9% of the fund, with major holdings in Samsung Electronics and SK Hynix. And Taiwan is the largest country allocation at a massive 25.0%. This includes Taiwan Semiconductor Manufacturing, Delta Electronics, and Hon High Precision Industry. The heavy weighting in Taiwan, especially in semiconductor manufacturing, is very apparent. The fund also holds 2.3% in short-term investments, mainly in the T. Rowe Price Government Reserve Fund. This provides a bit of stability and liquidity. In total, the fund has invested 99.5% of its net assets in securities, with a total cost of $3,644,832,000. The current value is $6,605,092,000, showing a significant unrealized gain. Looking at the statement of assets and liabilities, the total net assets are $6,637,683,000. This is made up of distributable earnings of $3,245,334,000 and paid in capital of $3,392,349,000. The statement of operations for the 6 months ended the 30th of April, 2026, shows a net investment income of $31,647,000. This is the income generated from the fund's investments after expenses. The fund also had a net realized gain of $330,965,000 and a substantial change in net unrealized gain of $716,179,000. This means the market value of the fund's holdings increased significantly. The total increase in net assets from operations over this period was a whopping $1,078,939,000. The statement of changes in net assets shows a large increase during the period of $717,505,000, bringing the total net assets to $6,637,683,000 at the end of the period. The shares transacted also show activity with shares sold and redeemed across the different classes, but the net result is an increase in assets. In these notes, we learn that T. Rowe Price International Funds Incorporated is a diversified open-end management investment company. The Emerging Markets Stock Fund aims for long-term growth of capital by investing primarily in common stocks of companies in emerging markets. There are 3 classes of shares: Investor Class, I Class, and Z Class, each with different investment minimums and availability. The Z class is particularly interesting as it is only available to certain institutional clients and funds advised by T. Rowe Price and its affiliates. The fund's financial instruments are valued at fair value. This means they use the current market price to determine their worth. For most of their investments, like common stocks, they are valued using quoted prices in active markets, which is considered level 1 in the fair value hierarchy. This suggests the fund is primarily invested in publicly traded securities with readily available prices. The fund invests in emerging and frontier markets. These markets can be more volatile and less stable than developed markets, which means higher risk but also potentially higher rewards. The report highlights that these markets may have less developed legal and regulatory systems and can be subject to greater political and economic uncertainty. This is a key risk factor for this fund. This section details agreements with T. Rowe Price Associates, Inc., The investment advisor. The investor class has a contractual expense limitation, meaning T. Rowe Price Associates will waive fees or pay expenses to keep the net expense ratio within a certain limit. This agreement continues through the 31st of December 2027. The I class also has an operating expense limitation, and the Z class has a near zero expense ratio as T. Rowe Price Associates agrees to bear all Z class expenses. This makes sense given the Z class is often used for internal T. Rowe Price funds or large institutional investors who negotiate these terms. Here, the board of directors reviewed and approved the investment management agreement and sub-advisory agreements. They considered the services provided, performance of the fund, costs, benefits, profits, and economies of scale. The report notes that the fund's performance lagged its benchmark and ranked in the fourth quartile compared to its peers for most periods. This is a really important point. Even though the fund had a good 6 months, its longer-term performance compared to its benchmarks and peers was not as strong. The board also looked at fees and expenses for the investor class. Total expenses ranked in the 5th quintile, meaning it was among the more expensive funds in its peer group. The I class expenses ranked in the 2nd quintile, which is more in line with its peers. The Z class with zero expenses is attractive but only available to a select group. The principal executive and financial officers have evaluated the registrant's disclosure controls and procedures and found them to be effective. They are also not aware of any changes in internal control over financial reporting that would materially affect it. This is standard boilerplate, confirming the company is keeping its financial reporting in order. The company's code of ethics is filed with its annual form N-CSR. They also specified that certifications required by Sarbanes-Oxley Act are attached, which is good practice for transparency and accountability. So, what is the story here? The emerging market stock fund from T. Rowe Price has had a strong 6-month performance with significant gains driven by its heavy allocation to technology and emerging market giants. The focus on Taiwan semiconductor manufacturing, Samsung, and SK Hynix, along with Chinese tech leaders, shows a clear strategy aimed at capturing growth in these high-potential sectors. However, the report also reveals a key concern: the fund's longer-term performance against its benchmarks and peer groups has been weaker, ranking in the 4th quartile. This suggests that while the fund can have strong short-term bursts, its consistent long-term strategy isn't always outperforming or keeping pace with its targets. This is something investors should definitely consider. The expense ratios also vary significantly by share class, with the Z class being free, the I class being relatively low cost, and the investor class being on the pricier side compared to its peers. The biggest risk I am watching is the fund's ability to consistently outperform its benchmarks over the long haul, especially given its strong sector bets. While those bets paid off handsomely in this reporting period, their historical underperformance is a signal that investors might want to look closely at the fund's strategy and its managers' ability to pick winning stocks consistently in the volatile emerging market space. What I'm actually looking for is whether the fund can translate its strong sector focus into sustained long-term alpha, or in the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.